Thank you, Lee, for letting me know. I'm unmuted now. Hopefully you can hear me, yes? Okay, wonderful. Welcome. I now have my screen shared with you, and I am definitely recording this time, so thank you. My name is Dineen Waslik. I am an attorney at DPW Legal in Tampa, Florida, and I help everybody protect everything they work so hard to create. And right now that includes, often that includes general business, and right now that includes really making sure that I'm up to date on the latest on what is going on with the SPA and the Payroll Protection Program, so I can help all of you too. So, I got all of the questions that you all sent in advance. Thank you for that. If you have questions during it, I may answer them while we're talking, or if not, there's definitely a Q&A period at the end. So definitely feel free to ask questions if you need to. Let me just start real quick by saying I am not a tax lawyer or an accountant. And so I want you to work with that person as well. All businesses need to have a lawyer and an accountant to be running your business like a business, and then maybe other tax-related statutory things that you can take advantage of here that I'm not going into great detail. I'm also going to make sure I timestamp this as relevant as of 5/17/2020. Things are changing daily. In fact, the first version of this presentation that we gave last Friday was before the loan forgiveness application came out. And since then, I've gone through the loan forgiveness application. And the good news is, I think I was right on about 90% of what I was predicting was going to be the case. And the few things that are different, I will highlight, but just know that this stuff is changing every day. And, and it's all a matter of interpretation. It's another one of what I like to call a deceptively simple government form. When I sent out the email, there's 11 pages total, including the instructions. It's really 3 pages plus supporting documentation that you will be asked to turn in at the end of the day. But you just got to make sure you understand how to fill out every single one of those boxes correctly on this form. So if you were on the webinar on Friday, I did send out an email to everybody there with a link to the application. When I send out the recording from today, I will include the application in it for everyone so that you have it. But let's get into some of the details here. So let me just back up and say, what is the Payroll Protection Program? It was created by Congress in the CARES Act on March 27th. And it's intended to help small businesses, defined generally as those having 500 or fewer employees and sole proprietorships, as well as the self-employed and independent contractors, to cover payroll and certain other expenses. It is a loan that may be forgiven in whole or in part, and that's part of what we'll talk about today. Obviously, after the first round came out, there was a little bit of controversy. The first round of funding was $349 billion. The applications opened on April 3rd to entities and April 10th to sole proprietors and independent contractors. And by April 16th, the money was gone. There were about 1.6 million loans issued, but soon thereafter, the news came out that many of those were to some larger businesses that had strong capitalization, and that caused a backlash. But the reality is, most loans were actually small loans. 3 out of 4 loans were for $150,000 or less, with an average loan size of $206,000. This is straight from the SBA's website. And here in Florida, the SBA reported 88,997 loans totaling about $17.8 billion in the first round. Congress authorized more funds. Another $320 billion of loan money is made available on April 27th. And 2.2 million more loans have been issued as of last Monday, and I'm sure that number is way up since then. Florida has gotten another $12.2 billion in those loan funds. So I think that while the first round ran out, there's still time, if you move quickly, if you haven't gotten one of these loans, to apply for and get one. But obviously, the next challenge is forgiveness, okay? It is a loan. The terms are 2 years with repayment starting in 6 months at a 1% interest rate. The loan amount was given as 2.5 times your average monthly payroll cost. And you have to leave out employer-side federal taxes from that calculation, but you were allowed to add in health insurance, state payroll taxes, and retirement contributions. I'm going to talk a little bit more about how to identify each of those things on some later slides. You may be forgiven for money spent in 8 weeks on qualified expenses. Like, that sounds like it all should be really simple, but there's a lot of challenges. you have to maintain employees on payroll. And well, some of the questions are, what are the dates? What if the employees won't come back? What if someone needs to take sick leave? And, what are the covered non-payroll expenses? What are allowable? What are forgivable? And in what proportion are they forgivable? We will go in detail into all of these things. And, part of it is that the numbers don't quite line up, right? It's hard to spend it on all payroll potentially. Because say your average monthly payroll from 2019 was $10,000 for 2 employees. Then your loan equals $25,000. 75% of that is $18,750, and 25% is $6,250. But you don't quite, you won't necessarily pay all of that $18,750 on payroll, depending on sort of how your payroll evolves. And so, especially for if you have a higher payroll, say you're one of those people who is a sole proprietor who usually makes more than $100,000 in a year, and you had that $100,000 cap, you did that multiplication by 2.5, and you may not be allowed to pay yourself more than you did before as a Schedule C person. So I will actually show some really specific, I've added slides for people who were here before to deal with how to deal with that conundrum. But, understand that there have been so many questions about that. The Treasury Department has issued a frequently asked questions document that changes almost daily. It was up to 46 questions on May 13th. I checked this morning. May 13th is still the last fresh date, but it could change tomorrow. There's 10 different sets of interim final regulations issued so far by Treasury, and some of those things can change. But the application did come out on Friday, and while it is possible it could be changed, I think it's less likely that it's going to change now that they have an application out, but I don't know. There's also been some additional IRS guidance and programs that have come out, and I'll talk a little bit about that. Thankfully, the 10th set of interim final regulations was, really specific on whether electric cooperatives are allowed to take PPP funds. So if Withlacoochee River calls us, great, but it doesn't probably apply to most people. It's definitely sort of shifting sands. So what I recommend that you do, let's start by having an understanding of what the magic dates are in all of this and why they're important, okay? The first magic date is February 15th, 2020, because you need to, that is the date upon which you have to have incurred any business mortgage, rent, or utility obligations that you're going to seek forgiveness for payments on. So the idea of that is they don't want you running out and getting a new mortgage or a new lease or a new utility service and spending this money on it. The idea is to help you stay where you were and pay the bills that you had going into this pandemic, not doing more things. That's also the date that you have to know how many full-time equivalent employees you have. FTE is always going to be full-time equivalent employees. And we'll talk about calculating that on a later slide. June 30th, 2020 is also an important date. That's the deadline to get your full-time employees to the same level that they were at on February 15th in order to get full forgiveness and not get a reduction for lowering your number of employees on your payroll. We'll talk about that in a little more detail in a moment too. The other date you need to know is your disbursement, and that's how you figure out your covered period, okay? The statute says disbursement, the regs say, and the application for forgiveness follows what the regs say. Disbursement is going to be counted as the date the money hits your account. I'm glad to see that they mentioned that in the forgiveness application because that'll be really helpful. So you take the date the funds hit your account, you count out 8 weeks, and that is your covered period, okay? The forgiveness application actually has added in an additional definition of a, quote, alternative payroll covered period. And I'm sure it's going to be defined also in regulations that come out later. They just haven't come out yet. And that is the first day of the first pay period following your PPP loan disbursement. And so certain people, if you have, the way your payroll comes out, I think that's trying to address the notion of, we only pay once a month and we got the loan like the day before payroll, we're not gonna be able to spend it all. It gives you a little bit of a forward look to sort of hit your to count from your next first payroll since you got the money, and your 8 weeks starts there. So that's great news for a lot of people who are having some issues with that. and you would want to calculate both and see which gets you maximum forgiveness, depending. But it's nice that they've added that in. That was not at all clear before. So let's talk about what the expenses are that are covered for loan forgiveness. Okay, within that 8-week covered period, your payroll costs as defined, interest on a covered mortgage obligation is defined in the statute, payment on a covered rent obligation, also defined in the statute, or a covered utility payment. And I'm going to go over each of those. And those all have to have been incurred in the covered period, that 8-week date starting of the date of origination, which they're all treating as the date of disbursement of the funds. Okay. Let me see the chat. Yep. I am no longer muted. Good. Okay. And let me move to the next slide here. Okay. The catch is that employee retention. And, that was one of the things I was not quite right on the last one, but we now have further information. That's why I say these things are changing every day. Forgiveness is reduced if the average number of full-time employees per month goes down. FTE was not fully defined before. Now it is defined on the loan forgiveness application as minimum 40 hours a week or combo of part-time employees hitting 40 hours a week. And then you also cannot reduce wages more than 25%. Other than those who are making more than $100,000 a year, obviously, if you were making 150 and they had to drop down to 100 for this, you're not going to get penalized for dropping down to the ceiling. But people who are making under $100,000 a year, if you drop more than 25%, that's going to be a reduction. Let's talk about how that is going to be calculated. You can determine your base average number of full-time employees using your choice of 2 time periods. February 15th to June 30th, 2019, or January 1 to February 29th, 2020. I think for most people, that January to February time period is going to be better for you, just because those are the people that you had employed when all of this hit, right? But again, it makes sense to look at it both ways to see. Okay, and then you divide the average number of employees during the covered period by your calculated pre-virus average number, and that's your percent reduction. So for example, if you had 10 employees, but you're only able to sort of, at the end of it, you only have 8 employees, you would be reduced, you'd only be forgiven for 80% of your payroll costs here. So that's kind of how the math goes. So, and you may, that June 30th date is kind of stagnant, whether you got your loan in the first round pretty early or you're getting it later and getting the money in your bank later. So just be aware of that when you're figuring out how you're applying your loan. June 30th is the date for having the right number of full-time equivalent people on your payroll. How is the reduction calculated for a salary? It's reduced by the amount that's in excess of 25% of the total salary or wages of the employee during the most recent full quarter before the 8 weeks. That's out of the statute. For most people, that would be Q1 2020. Does not include that, again, anything that was reduced over $100,000. That's going to be a dollar for dollar, subtraction from your money. So if you were $100 below that 25%, you'll lose $100 of forgiveness. But understand, if you don't hit these numbers, you're not on the hook for all of it. My understanding and what it looks like from the payroll, from the application, is you can be forgiven the parts that meet the qualifications. You just lose some of your forgiveness if you don't meet these metrics. Okay. And then real quickly, let's talk about a covered mortgage or rent utility and what those are. Again, it has to have been incurred before February 15th. The mortgage interest is on real or personal property. So think outside the box. It's not necessarily just your business office. It could also be, if you have durable equipment that you have a mortgage on, a truck that you have a mortgage on, the interest, not the principal, but the interest on that property, the payment of that from these funds is is usable as a covered expense. Covered expense. Rent to which you are obligated under a leasing agreement. Again, if you rent a copier in your office, that is something, it's not just your building or office space. You got to be paying this bill during this 8-week period. If you rent a post office box or a Regis office, those kinds of things. And then utility is defined in the statute. Service is, quote, service for the distribution of electricity, gas, water, transportation, telephone, or internet. All of those are really self-explanatory, except for service for the distribution of transportation doesn't quite sound right. It kind of comes a little weird. So it's not 100% clear what qualifies as those transportation costs. Certainly, if it's rent or mortgage anyway, then your lease or mortgage anyway, then you're okay. But gas, maybe. It's kind of hard to say. Someone asked, how could it be incurred before February 18th but not due until the month? Incurred in this case means that you had the obligation, right? You signed a lease agreement. My office, I signed my lease agreement 3 years ago, but I have to pay the rent every month. Or if you have a mortgage, you may have signed the note 10 years ago, but you're still making payments. As long as you're required to make you were required to make the payments starting before February 15th, you had the obligation to make the ongoing payments, it counts. So you make your current payments during the 8-week period on an obligation that was already on your plate, February 15th. Glad to clarify that. So there you go. Let me move forward. Oh, one other question I've gotten is, does your lease have to be in writing? And the answer is certainly it's better if it is. And one of the ways that you can prove up that obligation was incurred before February 15, 2020 is to have a copy of a written lease. If you did not have a copy of a written lease, things like your record of payments for the previous year would be a good way to show that this was an obligation incurred well before February 15th. You're just doing business as usual, but you're going to have to provide backup for this. Someone's asking, can you pay the rent for the rest of the year in advance? No, you cannot. You can only pay for the obligations that are due during this 8-week period. So that is not, and be forgiven. Let me be clear, and be forgiven. We're going to talk a little bit about sending money that may not qualify for forgiveness a little bit later. It's very important that you still pay for covered expenses, and I'll explain why that is in a little bit. But to be forgiven, it has to be only the 8-week period that you have. You cannot prepay July, the rent that comes due the following month. Let's talk a little bit about payroll, because I know there's some confusion on that. It's wages or cash compensation to the employee capped at $100,000 per employee. State and local payroll taxes, and employer-paid retirement benefits. So like this thing on the right is just like the report from my personal payroll account, and what it shows. The wages, the non-paycheck wages, the reimbursements, yes, it really seems to say that any cash compensation, so if you're reimbursing something, that's probably covered. If you're doing it through your payroll and it comes up on your payroll report. Employer-paid retirement benefits like employer-side contributions to a 401k covered, and Social Security and Medicare. Those are the ones that you do not include in this. That you have to cover that your own way. So that's one of the reasons, by the way, that a lot of us were encouraging folks to put their PPP money in a separate account. Like what I did when I did my most recent payroll. With my PPP funds is I had my PPP money in a separate account. I ran payroll. I looked at this report that told me my total cost for payroll, and I did the math, and I subtracted out the Social Security and Medicare, and and into my payroll account I put Social Security and Medicare money from my general operating account, and I put the rest of the money from my PPP account. And so if even if you don't have it in a separate account, you need to be thinking in those terms and make sure you do the math properly. Okay, so someone said, we own our building through an LLC and the law office pays us personally each month and has been for 12 months. Does this count? I mean, is the law office paying you for the lease is the question. And if you've been booking it that way all along, then, you'd have to provide those canceled checks to prove it. But at the end of the day, the other thing you should know is the bank is the one who is going to determine your forgiveness. Basically, once your 8-week period is over, you can, and we don't have, as far as I know, a deadline for when you submit your forgiveness application just yet. But once you submit your application, it goes to the bank. The bank has 60 days to decide on your forgiveness. You're going to be working with your bank on that, and the more documentation you have to give them, the better. One thing for the self-employed: if you are self-employed and you've made employer-paid retirement benefits, any contribution that you had reported on your Form 1040 Schedule C, line 19, counts as a employer-paid retirement benefit for this purpose. Okay. Same thing if you pay health insurance through the company. If you take your tax and you pay your health insurance and that also can count on top of the $100,000, which is really helpful when it comes to figuring out your forgiveness things. So, what goes on the Schedule C line 19 are things like contributions to a SEP, simple, or other qualified plans, and that's something you should work really hard, work closely with, either your accountant or someone else who's helping with this to make sure that you're requesting the right stuff. A big question we get: can I give myself a raise or bonus my employees? And the answer is, it depends. We know where you definitely cannot. We don't know for sure where you can, but we can make a good guess at it. If you are a sole proprietor for doing a Schedule C, the regulations are very clear that you are only allowed to pay yourself 8 weeks worth of last year's annualized salary. Okay. If it was under $100,000, then you have to do the math. Take last year's total profits, divide by 52 to get 1 week, and multiply by 8 to get 8 out of 52. And that's the amount that you're allowed to pay. And by the way, that's going to be a little bit less than what you calculated on, because you calculated on to get your loan. You calculated on 2 months. 2/13 is a little smaller than 2/12. And so there's a little bit of a gap there as far as what you're allowed to pay yourself. If you were making more than $100,000, your maximum forgivable payment to yourself will be $15,385. That's the math of it, okay? But that is for cash compensation. Don't forget that that payroll costs include not just cash compensation, but also health insurance premiums and the qualified retirement payment. So if you have those, that can help you get over the hump. If you are on payroll, or you have employees who are on payroll, at that point, it really depends on your risk tolerance. I mean, spending the money on payroll expenses are a forgivable expense. Cash compensation to employees is a forgivable expense. And so it doesn't seem to me that, and everything that the statute says talk about not reducing, but never says that you can't increase. It certainly says that Schedule C people can't get a windfall, and so they may be thinking that way, but we haven't gotten straight guidance on the issue of a non-Schedule C getting a quote windfall. But there's reasons why it wouldn't be a windfall. If you have employees who are working 10 times harder, it might make sense to bonus them. So just know that whatever choice you make on this, you're going to have that conversation with the bank who's doing the forgiveness and convince them, and that's going to be up to your risk tolerance. I mean, I would just say, especially if you're struggling to get to that 75%, that might be a way to do it. If you haven't gotten to the 75%, and we'll talk, and let me back up and say, the regulations have come out and said you have to spend at least 75%. We want to be forgiven. At least 75% of this money should be spent for payroll expenses, and then up to 25% can be spent on other covered expenses. Okay, so note that at least 75 is a floor, not a ceiling. Up to 25% is a ceiling, is a ceiling, right? You can't, if you spend it on more than 25% on utilities and mortgage and all that stuff, it's not going to be covered. You really got to get up to that 75% on payroll to get forgiveness, and if not, your forgiveness is going to be reduced somewhat. For everybody else, if you have payroll as a Schedule C person, if you pay yourself both, or if you get if you're a partnership, those kinds of things. If you get actual payroll, you might be able to increase payroll, but you're probably not going to be able to produce or get credit for any sort of distribution or dividend or those kinds of things. PPP funds cannot be used for a straight distribution kind of thing. The idea is it is payroll, and if you've been taking your compensation as dividends, you're not taking payroll, you're not paying payroll taxes. This is to replace monies that you're paying for payroll taxes. Partnerships, same thing. You can get up to $100,000 partner compensation, just so you know. Another big question we get is, what if I work from home? Can I pay my home mortgage, rent, or utilities? It's limited to your business mortgage interest, rent, and payment and utilities. In the regulations, there's an example of a warehouse and a car lease. It's very clearly limited to business expenses. On the regulations, it talks about for people who are sole proprietors who file a Schedule C. The question is, did you deduct that expense on your 2019 Form Schedule C? If you deducted it on your Schedule C, then it would be considered a business expense, and you could use that as a covered utility, covered mortgage, et cetera. They gave us another sort of allowable use of money for sole proprietors, interest payments on other debt obligations incurred before 214, but that is not forgiven. So you could pay other interest on other debts, but that piece would not be forgiven. So again, really look hard, probably at least your cell phone, hopefully you were running through your business in a way that, that would be a covered expense. Hopefully it is. Okay. What happens if a furloughed employee does not want to, can't come back? The SBA has come out with some regulations using its rulemaking authority to allow an exception to reduction in this case. They actually haven't come out with regulations. They said they have regulations coming, but they said it in the fact that these regulations will come out soon. And the answer is document. Document your good faith written offer to rehire, document the refusal to come back. Failure to come back makes it likely that they will be ineligible for unemployment payments. You might want to tell them that, and just so that they know. And just we'll go from there. And the application that came out, the application does say you need to submit that documentation, submit your written offer for reemployment, submit your documentation showing that they didn't bring it back or they asked for reduced hours or all those kinds of things. And hopefully we'll get more guidance that makes it, a lot easier for you to get reimbursed for other expenses, even if you don't quite hit that 75%. But the idea is you have to spend everything on covered expenses, whether it's payroll or the other covered expenses, and you may get some leeway on that 75% requirement if you've made these offers to come back in good faith. Another question I get a lot. I got an EIDL loan. How do they interact? Depends in part on the date of your EIDL. If your EIDL was between January 31st and April 3rd and you refinanced it into your PPP, then that is that. If you got that EIDL advance that was originally sort of touted as going to be $10,000 per business and then turned into $1,000 per employee and may have just like plopped into your bank account unannounced one day, then you don't have to repay that, but it will be subtracted from the amount of your PPP that can be forgiven. So for an example, using our $25,000 PPP loan, if you had an EIDL advance of $2,000 for 2 employees, then you can only be forgiven up to $23,000. The other $2,000 will be paid back at 1% over 2 years, but that's cheaper than both the normal EIDL interest rate of 3% and most other credit. So that actually can make it easier for some smaller businesses and sole proprietors to spend the money. Let me see. Yeah, so that, how to spend your EIDL money correctly is outside the scope of this webinar, but there are limits on how you can spend EIDL money too, so just be aware. The easiest thing is to hold your EIDL money until PPP is exhausted. If you can't do that, absolutely understandable. Make sure you use it for things that are allowable under the program. How can you spend unforgiven funds? It still can only be on qualified expenses. And I'm going to just like pound on that over and over again. Covered payroll, covered mortgage, covered rental, covered utilities. And if you spend it on other things like Rolexes, Rolls Royces, and child support, like this gentleman who was arrested on Thursday of last week for getting a $2 million PPP loan for his trucking business. Apparently he was in the TV show Love and Hip Hop Atlanta. Maurice Fain is the gentleman's name. He was charged with bank fraud. And in the article that I read, it stated that he swore that he would use this money on covered expenses. And the reality is you all swore that you would use this money on covered expenses. It's part of the standard application. I don't know about you, I signed my application on my phone like at 11 o'clock in the morning when it came in. I was like, woohoo, I got money, and so maybe you didn't read it as carefully. I knew what I was signing because I had read the full application very carefully. I was already setting up on these issues before I applied for the loan myself. But you swore that you would only use it for covered expenses. So even if it's unforgiven, if you can't spend it in the 8 weeks or you have to spend it, not in the 75-25 proportion, you can't meet the 75% threshold for payroll, I should say, that is okay, but just make sure you still use it on covered expenses so they can't come after you. Now, I mean, the SBA has issued some guidance that basically has said they're gonna assume that you took this in good faith if you took less than a $2 million loan. And I think most people who are on this webinar are smaller employers and don't have that size payroll. So, there's not gonna be huge scrutiny about that, but there's still the possibility if your bank flags something as, squirrely, they could come after you. So just be sure that you're spending the money on covered stuff, no matter when you spend it, or even if you can't get up to 75% on payroll. Okay. So this is a question that came up a lot, and after our last, oops, my screenshot's a little poor there, but after our last thing, I went back and I did the math. Okay. If you are self-employed, you took the max 100,000, and you got the 2.5, what does that mean for me, right? Because as we said before, doing that math, 8 weeks pay is a little less than 2 months pay. So if you have enough other covered expenses, the difference is $240, okay? So your annual interest rate is 1%. You have a 2-year loan, start date loan. Let's say your loan started on May 1st. After 6 months, you will have a monthly payment of $13.44, and you will pay a total in interest on that $240 of $1.90, okay? So don't freak out if you can't quite get to the 75% on payroll. That just means you have a small portion of your loan that's not going to be forgivable. Not that you can't get forgiveness at all, just that portion of your loan will not be forgivable. Well, but I don't have any other covered expenses. I work at home, whatever. Then you're going to end up with $5,448.72 extra, right? And still, you can use that money to pay yourself, and it just won't be forgivable. And that's what I would recommend that you do. And then, your loan payment, you'll have a monthly payment that's starting in 6 months of $305.11. You'll pay a total of $43.24 in interest on that. And if you need that money now to, after your 8 weeks or whatever, to cover your expenses until you get there, that's okay. You'll just pay back that small amount. So hopefully seeing the actual numbers makes it a lot better for you. Because again, the mandate of 75% is not, if you don't hit 75%, you can't get forgiven at all. The mandate of 75% is if you don't hit 75%, the small portion is not forgiven. And hopefully for most of you, it'll be like that whole, $2,240. And if that math is not quite right, maybe that amount is not quite right, I'm not sure, but that's the ballpark, right? So I'm not going to swear by these numbers. This is me, trying to figure out Excel, and that's not my strong suit. But just do the math for yourself and maybe give yourself a little bit of comfort on that. Another big question: can I use PPP funds to pay independent contractors? No, you may not. So remember, any other money that you have coming into your business can be used for all your other business purposes. And your independent contractors are supposed to be filing for their own PPP loan, and that might be something you can help them with if they need help or offer help, or just make sure they understand that they can replace their income. If they're an independent contractor, presumably they're working for people besides just you, and they can replace their income stream from all those places at once by doing one of these loans. unless unemployment would be better for them. Some independent contractors might be better off doing unemployment. They have to do that, that amount. What documents do I need for forgiveness? You will be required to swear in your application that everything you're saying is true again. You will need records. The application, again, it's 11-page form, but there's really 3 pages that need to be turned in. It's sort of the forgiveness calculation form and the certification, and then the Schedule A, it's called. The Schedule A worksheet sort of helps you figure out the cash compensation and the other compensation as far as the other payroll costs and all those things. And the way they lay it out, I know it's a little bit complicated, but it does sort of reinforce what I've been saying all along, which is the cash compensation is the salary number, right? The salary number. And then payroll costs are more than the cash compensation, because the payroll costs also include the state taxes that you pay. The payroll costs also include the health insurance that you pay. The payroll costs also include the retirement benefits that you pay on a paycheck, or for a Schedule C person that you previously, you have a history of deducting through your business. If you have those things, then you may well get over the 75% anyway. Hopefully all of you are paying for health insurance for yourself in some way, shape, or form. So hopefully you can get over that hump and get over the 75% just with that. Again, if you're at that max, it only takes a couple $100 more to get you over that hump. So hopefully you have those other payroll costs and you will get 100% forgiveness. And if you don't, you'll have other ways to deal with it. Because they're going to want you to have a copy of your lease or mortgage or other proof of that lease or mortgage and that it was incurred before February 15th. For utilities, thankfully, they don't want a contract. They just want, they include one bill that predates 2/15 to show that you were paying that bill on the same account prior to this time period. They're going to want you to have your payroll records and reports from your payroll provider. So, if you're using a Gusto or a QuickBooks or any of those kinds of things to provide your to run your payroll, that would be helpful. 2019 tax return that you use to get your loan to prove your average monthly salary if you're a Schedule C person, if you're a sole proprietor. And then if you're trying to get forgiveness, even though you haven't gotten yourself up to the same number of FTEs, documentation supporting the job offers, firings for cause, written requests to reduce hours, any of those kinds of things. That was supposed to say resignations. I was moving very quickly. I apologize. Again, this is going to be an application that goes to your bank for forgiveness, and then they have, under the regulations, 60 days to decide on forgiveness. We don't know exactly when this application is going to be due. Sometime after your 8 weeks is up, repayment starts 6 months after origination. So I would guess that you have to apply for then if you want to not have to repay, right? And you have to give, I would guess it's going to be due at least 4 months after your 8 weeks is done, because 4 months after your origination, because you need to give the bank 60 days to decide on forgiveness. I'm sure we're going to get more guidance on that very soon in regulations. Again, the application for forgiveness dropped on Friday and the accompanying regulations have not come out yet. My guess is they did that just because there's so many questions out there about how to do this. They want people to have some guidance on how they can spend, number one. Number two, my guess is that that the banks are going to do the same thing with the forgiveness application that they did with the regular application, which if you applied through some sort of portal, which I think most people did not submit a paper application in the first instance. I think they're going to be working to build a portal to upload your forgiveness documents and get those all prepared. So the best thing that you can do is just start gathering those documents now as you're spending the money. Make a copy of the check or make a copy of the electronic payment and throw it in a folder that you just call PPP Forgiveness App, and document the date of it and hold those PDFs all in one place. So when it comes time to fill out this document, I personally made a spreadsheet and kind of budgeted out to make sure that I was going to be spending the right amount of money in the right month. And then I have all this stuff in a folder that's telling me, that I have proof of what I paid when I paid it. Since the FTE calculation is based on June 30th, the applications probably, I guess, would not start going in until at least July 1. And then we'll get the rule soon, because you can't do it until we pass that date and you can show that you've got your people up to the right number of people. Couple of questions. Can I hire another part-time person? I usually hire a summer intern. Yes. There is nothing that says you can't increase your number of people on your salary. And certainly, for example, seasonal people are going to be increasing their payroll right now. The idea is just that you don't have fewer people on your salary, on your stuff. Does supplemental insurance like AFLAC count? That is a great question. It says qualified health insurance, and I don't know if supplemental insurance would be qualified health insurance. The first step is, are you paying that through payroll? Is it showing up on your payroll stuff? And it's something that we're going to have to look at a little more carefully, to be honest with you. I'm not sure. So I would have to look back at the definition of health insurance costs. I don't have that in front of me right this second. But feel free to give us a call, or that's something you can either talk to us if you want to have us help you through this forgiveness process, or talk to your accountant about. Let me see. Oh, so how does this affect my taxes? Now, I've already said, obviously, that I am not a tax advisor, and you have to consult with an accountant. But do know what they have said, just on a broader level, is the amount forgiven will not be taxable income. Usually, if you have a loan that's forgiven, it's treated as income, which can cause a big tax bill. That is not the case here, thankfully. But the flip side of that is that you can't deduct your expenses that you paid with the PPP from your taxes. So it's kind of like a flow through. The money comes in and you spend it, and you don't get you don't get screwed by having to pay taxes on that money like you would normal income, but you also can't deduct it because you're not paying taxes on the income. Seems pretty fair to me. There is a move to lobby to change that and allow it to be deductible after all. That would have to be done with a statutory fix, I think. And there's talk of that. I'll talk about that in a second. But for now, just know it's going to flow through, which means, again, keeping good records. This is not the year to take a shoebox full of receipts to your accountant, okay? This is the year to have a good system, good bookkeeping in place, because you want to make sure that and this is also, it's never a good time to just sign whatever your accountant does, but this is the year that you need to really look carefully and make sure that, if any expense, normally you deduct your rent, or normally you deduct the mortgage, you can't do that here for the ones that you pay with this money. So just make sure you're following that math really carefully, and be prepared to use your forgiveness application as part of what you provide to your accountant when it comes to tax time. There is a payroll tax deferral provision, but you can't do that. You can't defer the taxes during the PPP period. So again, talk to your payroll provider or your accountant about that. There's also like an employee tax credit that's available, and you can't take that if you're taking PPP funds. But you guys are all here, so just know that that you're there. And there's also some other sort of employee paid leave kind of things that there can be tax credits for that you can potentially still take advantage of, but you're going to have to work really closely with a tax advisor. Okay. I'm going to do some last words, and I'm going to go through the some of the questions that I haven't answered. Even though the application has come out, this still might be subject to change. Congress is considering a statute that would expand the 8-week period to spend, in which case we would probably get a revised forgiveness application. All of the regulations that I've been talking about right now and I've been extrapolating from are interim final regulations, subject to comment and change. And also in the HEROES Act, they've made some moves about making more than 25% non-payroll costs forgivable. So it is possible that 75% floor can be removed, because that's regulatory right now, not statutory. And either the regs can change or Congress could change it. But I don't know right now. And so you just have to work with the assumption that what you have right now is the same. Okay, so decide your risk tolerance. There are different ways that you can spend this money if you're not quite where it is, to try and maximize forgiveness and cover what you need to cover. But at the end of the day, don't let your risk tolerance get you, make sure that you're spending the money on defined covered expenses, whether that means you're not quite in proportion, I don't know, or whether that means you're taking a chance on giving yourself a raise, for example, that may not be forgiven. I don't know. Just document, and make sure you're in place. The worst case is that if you spend the money on covered expenses, then you have a low interest loan for the difference that's not forgiven with no prepayment penalty, okay? So not being forgiven is not the end of the world. I mean, obviously we took this money because it was promised to be free money, but with strings. All free money has strings. So make sure that you're using it the way you should. So I'm gonna go and do questions. I wanna make sure that I got all the questions that here. If your mortgage was deferred, can you still use PPP? You have to make at least those interest payments on the business mortgage during that time period to use PPP funds for it. So that would be, the payments have to be made during the 8-week period, and work with your mortgage provider about if they want to accept those interest-only payments. I know depending on where you are in your mortgage, interest might be 2/3 or more of your monthly payment. Generally speaking, they don't like to take a partial payment. Most mortgage companies do not. And so the question then goes to you, can I take the interest and can I make up the difference and make that payment and maybe ask for the deferral to be spread out more? I don't know. Let me see. Pardon me while I stare, that I want to make sure I get all of the questions. Okay, I think I've gotten all of these questions. Okay. For your full-time equivalent, does the number you put on your PPP application not matter then? Well, that's a good question. It does. It's going to ask you employees the time of your loan application. If your number was wrong on your loan application because you didn't understand how to do the math on what your employees were, that's okay. But you need to, sort of work with your bank on making sure your forgiveness is right. Most banks are not, we're looking at the 941 to see, but it's interesting. The application is asking for employees at time of loan application, and the application asks you for employees at the end of 2019, right? So that number may not be the same. And that's why it's kind of nice that they let you decide your application, the number of employees that you're basing your start time on, either from January to February of 2020, or from a sort of same time last year kind of thing. It just really depends on, So where you go. So someone said here, you mentioned the money received from EIDL, $1,000 per employee, is deducted from PPP and must be returned with 1% interest. Is this amount taken from the 75% or the 25%? So I think that right now the rule is you still need to try and meet that 75% for the payroll portion. And then, so it's just kind of taken off the top, but you still have to make that 75%. So I would still try to make 75% on payroll costs, which is not just the cash wages, but also the qualified health insurance, qualified retirement, and state and local taxes, okay? Let's see, I think I got this one. Let me just see, I answered that. Regarding payment of reimbursements to employees, there is date limitation when the expenses incurred by the employee, like mileage reimbursement. Yeah, so that is something that I would want to look at really carefully to be sure. And I did look at the application. Let me see if I have that part highlighted here. I don't know off the top of my head. It says, some of the things say during the covered period, and you can't include prepayments. And it's not really clear on some of these things. I mean, I would just show that you're reimbursing mileage. The best thing would be mileage during the covered period. And then it's up to your risk tolerance whether you want to try and do mileage over the covered period or not. It's the best answer I can tell you, because there's just still things we don't know about that. Let's see, I answered that. Okay, I think I've answered that. Okay, so how is the payroll amount calculated? There are a few different time periods that you can use to calculate your average pay period. And it just really depends on which one works best for you. So if you look back at the slide or look at the regulations, and we can help you work with that. Yeah, there's also a little bit different for seasonal employees. People who are seasonal employers get a certain timeline to go from. There's a couple of different timeframes you can choose from to determine what your average monthly payroll was. Would payments to outside vendors be a covered expense for forgiveness? For example, IT maintenance and service who's not an employee to the company. So maintenance and service, no, because that's a service. That's not a utility. If part of that is actually rental of the computers, then the part that is rental of the computers would be covered, but otherwise that's more like paying a contractor. So unfortunately, that is not a utility. A utility has to be your internet expenses, your internet provider, your telephone provider, your cell phone provider is going to be telephone. Those are covered utilities, but just a vendor who does maintenance for your existing computers that you own outright is not going to be covered. I'm just going to real quick say thank you to everyone who's come here. I'm going to continue to answer questions, but we're almost at the 3 o'clock point, and so I don't want anyone to feel like they have to stay unless they want to hear the next questions. Thank you for coming. Thank you for listening. We are offering, more one-on-one analysis to help you, assist you with doing this application and filling it out and getting it done. So, if you want more of that, please follow up with us. Everyone who has attended, who signed up and attended now, or signed up and didn't attend, or attended on Friday, will get the recording of this updated recording. So I will send that out hopefully this afternoon or Monday, the latest. So you will get the recording, and hopefully it's been helpful to you. And with that, there is a survey actually also when you log out, I think. Please give me feedback. I want to be able to be helpful in the future, so I would appreciate that. And now feel free to go if you want to go. If you want to stay, I'll answer a few more questions. Let me see. If I'm reading the application correctly, owner employees cannot give themselves a raise. Does this include S Corp shareholders? Yeah, that's a good question. It seems to be talking particularly about in the regs it said that about Schedule C people. In the application, it's not 100%, in the application for reimbursement, not 100% clear, but we may well get something more on that soon. Let me look at what it says. It says, yeah, so I don't know for sure because this is brand new and they haven't assigned it, but they are definitely looking at owners pretty carefully. So again, I know S Corp people are kind of screwed with this, and I'm sorry for that. That's the payoff that we've gotten. I think, again, it depends on your risk tolerance. The answer is, if that's the only way you're going to hit 75% anyway and use this money appropriately, then you might as well try. And if it's not forgiven, deal with that afterwards. The other option is to not try and use the money afterwards for other covered expenses or for your people, and you just can't do it in the 8-week period. The cell phone bills fall under telephone, copier lease, postage meter lease. It specifically says based upon it specifically says based upon the statute and in the application, it counts for real or personal property. So yes, any lease obligation like telephone, like copier lease, like postage meter lease, if it's a lease, it is covered. You can use it for those kinds of bills. Can the corporation deduct interest on a auto loan? Again, if you have a lease obligation with the company and the company is paying those bills, then that's a lease. So yes, you can use this money to pay on that. Employee was out and out sick and want to pay him anyway because it's a forgiveness issue. I mean, so that there's a lot of like sort of labor law stuff that comes in with that. But I personally have made the choice to pay my employee during this time period, even if she was out sick. I mean, I actually have sick leave built in anyway, but I've let her exceed her normal amount of sick leave in this case, and that's a choice that that you can make. So someone said they received $27,000 and 10K for the idle. Does that mean that I have to pay the 10,000 back and it's not forgiven? Yeah. So 10,000. It's not that it's. Yeah, it's kind of like a double-edged sword. You got 10,000 more than everybody else, and so your forgiveness on the PPP is reduced by that amount because really it is something that you're going to have to pay. So is there a rule book for what the idle needs to be spent on? I was offered a significant amount for the idle but haven't accepted yet. Yes, there's a lot of regulations about what SBA idle funds need to be spent on, and I can try and provide some information on that in a future thing. May the PPP funds be used to pay for workman's comp or annual premium during the 8-week window? I do not think so, because workman's comp is not state employment taxes and is not health insurance specifically. So I personally would not do that. Let's see, but hopefully, let's see, July. And I think I have answered just about, oh, let's see. I have 2 more messages. Oh my goodness. Okay, so someone paid payroll on May 1st, loan dropped May 4th, and that's the day they actually were paid. Is this part of forgiveness period Gusto has in the PPP forgiveness report? So it looks like yes. When the money is paid is when you can start. After the money is paid, if it's the same day as it's paid, you can start paying the payroll for that. Depending on your pay period, it may not matter because you may end up with sort of 3 payrolls in that 8-week period, you know, if you're like right on, and so the last one can work instead of the first one and you're covered. But it should be, and the fact that Gusto is putting it on your payroll report is promising, and it does seem to say on the application for forgiveness that as long as it's paid to the employees on that date, that is when it starts. But that's one of those edge cases that I would want to read the regulations very carefully when they come out, just to be sure. You know, it seems like that from the forgiveness application, but it's not 100% clear. Let's see, I applied for my PPP amount based only on employees' wages and not my income over $100,000. Can I now use some of the PPP to pay myself to get to 75? I'm an LLC taxed on a Schedule C. So yes, look very carefully at the Schedule C payments. The Schedule C owner can pay him or herself up to, you know, if you were maxing out at over $100,000, you can pay yourself up to $15,000 out of that money, and $15,000 and change, whatever the actual number is. I was on an earlier slide, and you should be in a position to spend all of your money on qualified payroll expenses. So you're one of the people who maybe didn't apply for all you were entitled for, but it'll work out to your advantage because you will ensure that you're forgiven for all of it. That makes it pretty clear that you'll be able to pay everything on covered expenses. Can we do an early off-schedule payroll for the last one? That's a great question. Again, that's one of those, you know, what is your risk tolerance kind of questions. I would try to do it other ways if possible that are more clear cut. And if you can't, remember that the penalty for that is getting that small portion not forgiven and having to pay it back at 1% interest. There's no prepayment penalty on that. So when things are back up to speed, then you can do that. If you need help figuring out, you know, one of the things that we can do if you do a consultation with us is help you sort of do the math and figure out what your best options are for trying to get the right numbers, you know, in place and deciding how to spend the money in the 8 weeks to maximize your forgiveness and, you know, which risks you're willing to take. Hosted electronic health records that we pay for monthly, are they covered? I don't think so, because that's not going to be health insurance premiums, and that's not going to be, I don't know if that would be considered a lease agreement. I would look very carefully at the lease. Are you leasing server space, or are you purchasing a service? I think if you look at the contract, you're purchasing a service, you're not leasing particular space. so that's most likely not going to be covered. But it would really depend on the particular wording of that contract. Let's see. I think I have answered all of the questions. Does anybody else have any other questions? Anybody else still here? Okay, well, with that, I'll say thank you again for covering. I hope I have answered all of your questions. If you have any other questions that you think of later or want answered, feel free to call us for a consultation. We'd love to be able to help you with all of this. Thank you so much, and I appreciate it. Goodbye. Up and end. Bye.